We can switch up the song after.
We caught a tail. Kramer fading while we set the pace. Daily stack markets. We run the play. Green on the screen every single day. Cut off the TV with the creamy yelling loud. CNBC static. We the signal in the crowd. We don't chase the top and we don't sell the field. Real money moving. Let me make it clear. Bell to bell. We breaking down the floor. Levels on lock. Yeah, we already know. They playing catch up while we running the show. DSM and yo. Yes. Watch it grow. DSM. We caught a tail. Kramer fading while we set the pace. Daily stack markets. We run the play. Green on the screen every single day. Kill him in the booth with the mini monster loose. Small caps ripping, yeah, he found the juice. Follows that by aiming with the levels on lock. Snap it on the chart when the candle hit the top. JFDI and Jody, solid troll on the trend. Reading every candle to the closing bell. Whole squad deep and we never miss a play. Daily stack markets, we built a different way. DSM, we caught a tail. Kramer fading while we set the pace. Daily stack markets, we run the play. Green on the screen every single day. Daily stack markets. DSM, turn the TV off. DSM.
Abram free fall. The Federal Reserve announces unlimited quantitative easing, unlimited. Within 2 years, roughly 40% of all dollars in circulation were created after that announcement.
Some patterns are right. 2020, here's a trillion, here's another. Keep it moving, stimulated your reflection while the asset holders grooving them two rows like it was raptured. 40 points in 2 rotations, and they blamed your grocery bill on ships and weather patterns. Patience called inflation transitory till the word retired in shame. Every crisis fed the printer, every printer fed the game. And the debt cost 37 trillion, interest east the budget. Now the only buyer left is math, the math is never fudge it. So block zero was the answer to 100 years of Dragon Chancellor on brink of bailout, stitched inside the Genesis awakened. They confiscated metal with a memo and a mandate, but the 21 million is a covenant no order can invade.
They came for grandma's wedding gold with legislation, not a gun, but you can't confiscate a memory. 12 words beneath the morning sun. My keys, my coins, I'm done.
They're selling you a stable coin, a dollar in a costume, programmable and traceable, a leash inside your wallet's living room. Tether buying treasuries like a nation in the shadows. The empire found a new export. The deck rides on the app now. They can freeze it, let the issue. They can flag it, they can fence it. Money with enough switches of yours. It's just a rental with the minutes. So I hold the one that cannot print and cannot be commissioned. From the dub lines to the having not connected every mission. They had 6 men in a train car.
I got candlesticks and cameras.
12:30 every weekday.
Teaching history in stanzas. They can print it, but they can't print that. No, they can't. No, they can't. Every dollar's getting thinner. Better watch your back. So where you get the truth?
The Daily Stack.
Where you learn the game?
The Daily Stack.
12:30 on the dot, and we don't know how to slack. When the paper turns to powder, I'll be sitting on the stack.
Daily Stack. They built the printer, and they put it in your pocket. One goes to the exit. Next shot.
Let's get going, boys. We got 4, 3, 2, 1. Ladies and gentlemen, welcome back to the Daily Stack. Today is July 27th. It is 12:40. So not only are we 10 minutes late, I apologize to everyone for that first song. I did not give it a listen first, and that is deleted forever one of the best songs I've ever heard, to be honest. But gonna have a ton of time for chatter. Although JFDI, you did tell us a crazy story about losing your keys earlier. You want to talk to that for 30 seconds. But we got a big week, obviously, with Amazon, Meta, Microsoft, Apple. Oh my, that was a play on Lions, Tigers, and Bears. Oh my. And JFDI, tell us what happened with your keys real quick, and then we'll.
Oh, dude, I went mountain biking up north, about 2.5 hour drive. Brother and I went to go grab a burger after we got done, and threw my house keys on the bumper for some reason, or at least I think I did. Got home, I had just some rings and keychains on the keychain that meant a lot to me, and I was like, fuck it. So I drove back up there last night. I didn't get home until about 2:33 this morning, so I'm pretty
Brutal.
spent. It was a rough night, but
Joey, I'm going to come to you here in just a second. But is this Caleb or not? Caleb, I don't know if you're listening, but we did see a 528,000 call buyer on FRMI. Joey, you said that was a shitco. Caleb loves it, and he bets on Rick Perry here. So that is something I did want to just call out quick.
I wish you luck
tomorrow. Anyways, let's rock and roll. We are live. Joey, JFDI, what's going on in the markets? Trump flips a coin. We're going to war. We're not going to war. We're going to war. We're not going to war. Markets are still listening. I said I saw this the first go around with him as president. His tweets mattered less and less over time. Like people kind of figured his bluffs or they didn't have as big of an impact. But Joey said there's green candles coming in. So today before we hop into Amazon, Meta, Microsoft, and Apple. Oh my.
Yeah, it's been a wild, I guess, Monday. I thought we were going to be getting slaughtered today, but unless you're just all in on semiconductors and memory, you're doing pretty good. So
yeah, your Reddit's looking smoking.
Yeah. I don't know what's going on with Reddit. I mean,
let's pull up your charts, JFDI. I'll add them when you get those.
Yeah, it was wild. So the leak that they were considering walking away from Google, and then you kind of analyze why they would do that. Don't love the idea of it, but I get it. If the organic traffic to your site would be much more valuable, especially with how they monetize users. But like the magnitude of the sell-off based on the $60 million contract. Now, granted, that could be worth hundreds of millions of dollars after the renegotiation, but I don't know. It was too significant for that rumor, that sell-off. But I don't know. This market is very skittish.
It felt like they were calling the bluff, and I thought about this in depth actually. About Google holds the cards though, kind of right? Because couldn't they just minimize the amount of traffic that goes to Reddit ultimately and hurt them even much further than the 60 million? I agree is nothing, right? And they could easily double that. Or you'd think that Reddit founders would be smarter to then play around with them, but I mean they had to throw. It's kind of like the art of the deal here. They're trying to convince them that they'll come off, but at the same time, I was thinking that Google could just take them off the top. They could twitch something in the algorithm to make Reddit come down a little bit further.
If they really want to get into games like that, but I don't think Google wants to do that.
Yeah, I'd agree. I mean, what is 100? It's crazy that we're saying this out loud, but what is 120 million or 200 million for them?
Yeah, and Google wants to surface the best search results for what you're searching for because they're that dominant search engine. So throttling one of the best sources of that data would be, it'd be detrimental to their own search.
Yeah. What's the bottoms keep looking to get higher here? No chart. So
Again, like as a technical guy, I think it's generally all smoke and mirrors. So no matter what if you have a strong conviction in a name, like any type of bad news is typically like I guess that's probably where buy the dip comes from. It's typically backfilling or at least again, if you have that longer term conviction in whatever name it is that you're looking at. I love to theorize no matter what the name is, or even like the geopolitical crap. I love to, like, I don't know, think about it all, but price has to confirm my bias or my theory for me to really give it any credence.
Yeah, we got ourselves in trouble quite a bit theorizing on pounding the table. We're like, if this happens and this happens and then this happens, then we're good.
It's fun to do. It's just, it's like, yeah, yeah.
I still see that today. Like, we're going to get approval for this, which means this, and, you know, or this bottleneck leads to this bottleneck leads to this bottleneck. Everybody on X is a bottleneck expert now. It's just not simple.
Yeah.
And I would say keep it simple.
That is
that, and like it's really difficult to, like, you're ultimately having to put yourself on the same time frame and timeline as whoever's in control of price, right? Like, so long as you're in alignment with that, you're all right. But if, you know, we start to, the only reason that we have any reason to get, the only reason we ever have to get frustrated with whatever's happening in the market is because it's going against our bias, or something is not happening in the time frame that we want it to happen. It's like, I can't control the market. You can't. None of us have the bags to push price around. So the best we can do is pretty much just align ourselves with the trend and ride it,
or find very, very small caps that we can.
Yeah.
Let's get into the biggest news. I'd say kind of the market's waiting for here is Meta. We have Amazon, Microsoft, and Apple coming up. So you pick which one we whip up first. But Joey, what are you most excited about? I've been hearing a lot of Meta chatter from you just because it's been beaten down. But
yeah, I like Meta and Amazon the most out of those. I mean, Microsoft's there. It's very inexpensive. Just not as exciting total business as the other two. Yeah, I think the most important thing, just like last week with Google, was it's going to be the capex numbers on Meta, Microsoft, and Amazon. So Apple, they don't really play that game. So I don't think Apple's really all that important to the market anymore, because it's just one of those kind of steady eddies that everybody throws in their back pocket, almost like Nvidia now, where yes, very important, but it doesn't have those massive moves that ends up moving the entire market anymore. But yeah, it's going to be those capex numbers. You know they're going to go up, but how will the stocks react to that number? So a lot of them moved on Google's number last week. So the market's expecting them to go up, but will they fall when they announce that? Or the other thing that's weird is as capex numbers went up at Google, then you saw all the companies that would benefit from that increased capex just continue to tank. So this market, it just feels like a lot of things got way ahead of itself, and now everything's being sold off. We're seeing a bounce in a lot of these today, but you know, the very interesting thing was, you know, for a long time, memory stocks historically trade at very low single-digit multiples, and you saw those rapidly expanding. So you got people in the camp of, well, it still only trades at 4 or 5 times earnings. It could trade at 20 times, and the stock would go to here. And now you're seeing, yes, the multiples expanded quickly, but now they're contracting quickly. The market essentially needs to say what they're willing to pay for, you know, something cyclical like memory now, especially as everybody's targeting that as the main thing driving their prices higher. You know, everybody's going to be working on their own memory, just like Amazon. Everybody makes their own chip. I feel like everyone's going to be making their own memory soon.
At a certain point, that's going to be looked at as a weakness. Like, I would imagine, like at a certain point, you take some name and like they need NVIDIA's money, or they need such and such money. They need money from somewhere. That's going to be looked at as like, they're struggling, like fuck this company kind of thing. At least that's how I would kind of look at it. And then Joey, we were kind of talking just prior to you popping on, you know, with growth land getting obliterated and starting to see kind of a little bit of weakness hit the chips and memory names. I guess one could argue that, and the mag names have already been in a range. Like you just look at any one of the mag, whether it's, you know, Meta or Microsoft, whatever, they're in a massive range. There's not really much to those charts where once you start to see the SMH chips memory start to crack, it's almost like they're the last to fall. So perhaps the kind of pull-in is, or we're nearing the end of it rather than the beginning. But, you know, again, looking at the Qs and the SMH, if they really do decide to kind of push this lower, it does kind of appear as it's just getting started too. Like, you could argue both points, and I would also argue that I think the Fed, I think that is a big kind of unknown, and I think that's a wild card that we don't really know. Like, are they really considering raising rates, or are they going to start slashing rates? I think we need to see a like a theme. Like,
Yeah.
I want to know what they're doing. I'm not interested in involving myself in a market where they start raising rates.
Yeah.
Or at least in the short term.
So since 1970, because I was looking this up, because I would figure in a midterm year, like,
yeah, right,
these would do great, but the midterm, the S&P's average is 7.5% compared to 12.4% in non-midterm years. Two most recent midterm cycles were actually the worst on record, with 2022 down 18%, 2018 down 4.4%. So Meta specifically, they did really well in 2012 with the mobile ad transition. 2018 was an anomaly because they had Cambridge Analytica fallout. 2022 was brutal. Meta fell somewhere around 64% for the year. That was driven by Apple's privacy changes and TikTok starting to grab a lot of that attention. However, Meta's low for the entire 22 crash hit right around the November midterms, basically bottoming out. But from that bottom, the stock ripped 175% over the following 6 months. So kind of counter to your thinking, where the market usually is like 6 months ahead. In this case, they're probably getting the earnings reports on the following after the midterms. That was interesting. I just pulled that stat up. I'm not that smart to like know that stuff, but again,
just looking at the chart, I mean, it kind of just looking at it, I guess the reason I would be in the camp that this is going to be kind of short-lived if we do kind of capitulate here is we had a massive sell-off here. It was a lot less brutal here. Maybe it's a little less brutal here, and we kind of snap out of it. Like, I'm just in kind of V until, I guess, proven otherwise. I will be in camp V out of here.
Yeah,
I think it's going to look something kind of like this. Whether we, you know, depending on how long it takes for us to do this, this is kind of what I think. It's kind of the roadmap that I'm following.
Yeah. So the MacBooks, I know I saw a headline that Apple's going to be raising their prices. You don't think that will, and they're making their MacBooks now more focused on AI. I mean, they're designing them around AI usage. Curious to see how that pans out. I agree with Joe. It's not like the sexy name anymore to pay attention to, but you zoom out. Yeah, it's been working. It's pretty consistent. I haven't owned Apple in years though, so I guess it's kind of off my radar. But anything you want to touch on with the Apple, or it's not even on your?
I mean, if you trade huge size, I think it's kind of to kind of Joey's point, I think it's a pretty, I don't want to say easy and predictable name to trade, but again, if you trade huge size, it's pretty.
Yeah.
I don't want to call anything easy because nothing I would say is easy, but yeah, I don't really have anything to add on Apple.
You can go on vacation with Apple though. You know,
the names like this are great for day trading. Like all the mag names are fantastic for day trading. You can trade whatever pattern is that you like, that a technical guy wants to trade. Like if you just stick to the mag names, you can just hit those on repeat over and over and over again. Not saying everyone works out, like it's not like you're gonna have 100% like hit rate, but like if you were gonna put together a basket of stocks to day trade, the mag names are kind of, in my opinion, it.
Yeah. Any Joe, you got anything up your sleeve on a potential mini monster or anything that most people are not looking at that you're finding?
I mean, this isn't the market where I would be playing too many games.
Yeah.
So yeah, we discussed trying to find some sort of mini monster, can get back on that. it's just not one of those markets where you want to do that. I mean, you saw
it's preserved mental capital.
Yeah. Everybody's, selling off the trade, selling off all the fun ones, and essentially waiting for a bottom to start buying all these. Nick made a very good point where, it's like the SMH and those components, the last to roll over. It used to be always the Mag 7 names were the last to roll. And that just completely flipped. Maybe like last year is when that started. You see Mag 7 sells off, then NVIDIA and the rest of the SMH, and then we bottom out. So maybe this is that flush on the SMH that we're looking at today. And then, of course, I mean, memory's kind of taking it more intensely than everything else. But I think in a massive uptrend is where we'd want to start playing with those mini monsters again.
Yeah, I agree. With SanDisk kind of leading, I could definitely see kind of a pull into the 200-day, or just however this, you've got this air pocket here, and it, again, just kind of like looking at it, it looks like it's closer to the end rather than like a massive like beginning. But I still believe that most names, the majority of names, are going to move in the direction of the indices. It's just some are going to move faster and further than others. So if they really decided
the SanDisk run was just so much greater than everything else that it got the most to give up. Like Micron, it's been crushed, but not nearly as bad. I think SanDisk has almost been cut in half. Micron's 30% off the high. SK Hynix, now it's just cracked below 140, but it's just a very short trading life, so you can't really make much of it.
I think
the other one, Seagate, STX. I think that's the only other royalty one that we could look at.
Yeah.
One other factor that from a Trump angle, Netanyahu's coming to New York on Wednesday. So
and
I don't
Mamdani's going to try to arrest him, right?
No, he said he can't.
A mayor can't arrest.
Believe it or not, he could not. He can't do free buses. He can't do a lot of things right now. But I don't think that they're going to bomb while he's traveling, right? And I think maybe he wants, that's something. I guess from like a massive "we're going to war" type of thing. I can't see them doing that now, especially. Trump's not like, sometimes he sounds very dumb, but like in general, he's not dumb enough to do something crazy during this earnings week. I don't think. I could be wrong, but my hope is that, because if all of those go down, it could really tank the market.
I think he's definitely taken notice that the market's been taking a hit. Him and Scott Bessent talk about that regularly.
Yeah.
So I think that's where he's like, all right, I can't let this get too out of hand. Like, let it run back to all-time highs, then pull out the crazy card.
Well, I think, not to be, it sounds very morbid, but I think that logically makes sense that they wouldn't do it this week, let the market run up, and if they're going to make a move, do it when the market's peaking again. But that's just my Avo conspiracy angle, not financial.
The other huge thing to watch this week is, so we get GDP numbers Thursday after the FOMC on Tuesday and Wednesday is their meeting. So they've got to have those numbers in advance, to where if GDP is now 1.7, they used to expect 3. Oil prices are all over the place. Like, there's no way in hell they could raise rates, but they also can't cut. They just got to say, look, we're going to keep sitting on our hands till something happens.
Yeah.
So I was just looking. We actually, my next guess is not till 1:30, so we don't need to hustle out of here as much as I thought. But I was looking at the trends here today. So airlines and travel and transportation is all thematically up right now. Is that just typical for summer right now, or you think if there's
somebody pointed out last week that when the market starts to go to shit, people just love to travel and get out. Look at Texas Roadhouse. People gotta get out and eat.
Is it ripping? I didn't even.
It's
not on my not on my screen.
I find food stocks kind of interesting, a little difficult to trade, but the chart looks great, and obviously we know how Chipotle, that monumental run, it's got a massive base. So if
Jersey
you're looking
Mike's
for like
week, right?
things to trade, there are trades are working in both directions right now, which is again wild. But I think, yeah,
That's a pretty wild chart. I mean, it's almost like so this is coming down, peaks in November.
also up the monthly.
Yeah, let me see. Wow. That is not one I've never ever looked at, to be honest with that. It's been ripping. What about how's Big Mike's? I was gonna say. No, I'm going too crazy. What did I say? Jersey Mike. Jeez.
Are they publicly traded?
I think they went public last week, right? Or is it this week?
Oh,
I
really?
thought it was this week.
I could be wrong.
I don't know. It's such a shit brand that I have zero interest in it. It was great before PE took it.
Okay, so I think it is July 30th. Sorry, it's this
JMKE, right?
Yeah, this Wednesday. Wow, I'm getting some love.
All those brands are so great. Then private equity buys them. They go to crap. They bring them public. Who knows what'll happen?
What's his name? Had a hilarious. I'm blanking on the guy's name. The comedian I always listen to. He went on a whole tangent about private equity coming into food. It's like, all right, you gotta get absolute shitty food, do the bare minimum. I didn't realize like Chili's and TGF Fridays, they're all like dying out right now.
Oh my God. Yeah.
Dude, Chili's is actually crushing. Look up Eat, the ticker. They've been very good.
He did say Chili's was the one that is fun. He's like, people go there, have fun. They're like, they know it's not food. Tim Dillon is the guy I'm thinking of. He's like, they know it's not food, but it's fun. He's like,
Yeah, they've been absolutely crushing it. They own Chili's. What are their other brands? I always mix them and Bloomin' brands up to where I think Bloomin' owns Outback Steakhouse, right?
which has also been getting crushed. They just closed one. We used to get dropped off there for the bus heading back.
Yeah, they have Chili's. It's Just Wings. I've never heard of that. And Maggiano's Italian Grill.
Maggiano's is solid.
Beijing and Grove Boulevard Burger and Brew, Fat Dragon.
Jody says everyone's having a good time at Chili's because everyone's hammered. They don't realize it is fake food. Now, I would say I haven't had Jersey Mike's in probably 5 years, and I had it last week, and I thought it was phenomenal. But I knew I was just eating straight poison. It's like cold cuts are literally the worst thing you could possibly eat, I think.
On top of that, like, dude, anything that's fried, like any type of food that goes in a fryer, oh my God, like it runs right through me. It's brutal. Yeah. You know, like none of them.
Firehouse Subs is like, they're the go-to. That place is great.
They have one at Newark. The Taco Bell explosive diarrhea.
Yeah.
I thought they were cleared that it wasn't them.
Oh.
Well, it's just people that ate at Taco Bell, I think, also happened.
Well, they probably, the typical person that eats at Taco Bell probably eats a lot of other crappy places.
Oh, yeah. God, yeah.
So it just so happens that those people also ate at Taco Bell. Because, yeah, the lettuce supplier that they said was supplying to those Taco Bells then said it was a false positive. So they no longer knew who did it and that it wasn't necessarily Taco Bell. I think that was correct. But then still, people think, oh, Taco Bell explosive diarrhea, and they saw a 19% decline in traffic. Which I will say, my kids had it like the week that the whole thing came out, and I was like, oh, you guys are done for.
I did too. And I think I had it. It was,
and they had like the lettuce on the crunchy tacos. It's like, yeah, you guys.
Well, it's funny. My wife's like, she's like, I want to eat healthy, but we can't eat salads now because you're gonna get.
Yeah, how'd Sweet Green do during that? Let's see. I'm pretty sure they've. Oh yeah, damn. Down 27% past month. Do their wraps have lettuce in it? Because it wasn't the whole catalyst for them wraps.
Yeah, which were good, but it was too expensive. It was like, I think like $16 or $17 for a little wrap. Very good. Remember, I did that was my first UGC trials of eating the wraps back-to-back days. Those were good. All right, what else we got cracking? The market seems to be boring for you guys right now. So
yeah, I cleared off a ton last week. I remember we were all texting. I was like, why play around in this market? So I sold off like my Marvell, all the other things, except then I got Marvell back this morning because I mean I was selling that at 200 and something, and then it came all the way back down. I think it's like 186 is when I bought it back for the exact kind of thing that Nick was saying. You know, is SMH the last shoe to drop? And if so, I mean, this type of decline across these names would result in that ultimate like just hockey stick recovery.
Yeah.
So that I want exposure to it if it were to happen, but still much smaller position than I initially put on just in case, you know, it's not done yet.
No.
The other interesting one is VICR. Nick, you'll remember that from Oktoberfest 2025. Which so what's awesome is it's kind of like what GP always says, like the stocks always come back to that 200-day. And look at it. It's creeping up on that bad boy.
I Googled real quick O'Neill. So William O'Neill, who not to switch subjects, but William O'Neill, you know, wrote How to Make Money in Stocks. For guys that are not trying to pick the bottom, this is kind of like what you're looking for. Let me see if I can drag that over real quick. You know, you don't have to necessarily try and bottom tick these charts because you generally have plenty of opportunities. So like when you're waiting for kind of that capitulation low, you know, you're just waiting for kind of a follow through bar. To your point, Joe, like you can catch it on the upside and wait until that momentum turns. And so like if you go back and kind of just pull apart the indices, almost every even V out has had like kind of a capitulation day. You know, those that have taken advantage of it were obviously not like in the perma bear camp. They had a general bias to the upside based on like larger time frames. So anyway, sorry, I just wanted to throw that in there real quick. That again, if we're talking about the SMH and it's the last to roll, you know, maybe the Qs kind of again, that's what it's going to kind of look like in here if we do bottom here. So it kind of gives you a framework to look and say, okay, let's see if we get some like what is that capitulation going to look like? It's probably going to be a wide range bar or a couple like real long tails or wicks off of, you know, probably this range. I was kind of with how weak the market was this morning. I was like, well, shit. I honestly wouldn't even be surprised if we pulled back towards like 630 and undercut the 200-day. But again, it's a wild card week. So to your point, it's not really a market to be, unless you're playing it to the short side and you're really, you know, you are bared up. Sure, you can press it because there is things are happening that are confirming price resolving to the downside. We don't have anything, at least here, that is pointing us to say, hey, let's try and bottom tick this right now. If price was already kind of drifting down here, sure, I could understand trying to bottom tick because you're like, oh, I got the 200-day here. I got a retest of this massive breakout. That makes sense. But we still got this air pocket. So just kind of wait it out a little bit. If you're already in tilt and then you're going into this wild card week, like, dude, you're not going to be making good decisions.
I would have thought with the Trump accounts that the market would be much higher because they did a silent pump, right, where they gave all these kids $1,000, put it in the S&P 500. You would have thought that would have helped boost it a little bit. Do you think Burry is going to be right on Micron and NVIDIA here? He just added more to his short here. So is he a one-hit wonder or is he gonna?
You know, again, when price breaks, you typically see kind of like the bigger wide range bars almost in the downturn. The whole idea behind like stair stepping up, elevator down. So when people try to come out with these like forecasts and say, oh, you know, it's going to take us like 6 months to get down to the price. Well, no, like if you just look at how the market's been behaving, like Micron could sell off 200-300 points and by the end of the week, it's not out of the question.
That'd be crazy.
So I'm not saying I necessarily agree or disagree with Burry, but again, we've got this air pocket here, and along with SanDisk, on a bigger time frame, like you were some long-term guy. Why would you really care if price kind of pulls in and drifts into the 200-day? This is your line that most long-term investors are kind of paying attention to. And even if price drifts below the 200-day, so long as they keep it close and contained, this is going to continue to kind of just drag up.
Micron's one of the craziest stock. I mean, we were running it 2 months ago, and it was just like every single day was going up, like that whole big run up.
Yeah.
We were trading that, and again, almost round trip my my trading account, which I don't know how you guys do it. I'm more in line with Joey's thinking, keeping it simple, stupid. And
well, have fun trading, and then just don't overstay your welcome, and shift that into like turn the trade into an investment, then just keep trading. So, I mean, we've seen this in neoclouds, you've seen this in memory, a lot of the names that you'll see, like retail just goes crazy, and you think, oh, I'm onto it. Like this time's different. Multiples are going to expand, and it's not gonna contract. Memory will trade at 20 times earnings now. It's like that's just not how things always work. Like the only time I've ever seen a stock that historically trades at a very low multiple expands and maintains is Apple. Like it was forever trading at like 8, 9, 10 times earnings, and then you saw that rapid multiple expansion. Now it consistently trades at that. I don't know any other story that kind of sets that type of rule.
Yeah.
I was talking with Matt Timpain, he replied to me on StockTwits last week, and it was kind of the idea that these boom and busts, especially in the low float name, like the low float thinner names, it's speeding up because margin and leverage is being used heavily, especially amongst those that really have no business using it.
Yeah.
And then on top of that, like how fast information spreads on like the internet, social media. I mean, just like, again, you could point to like the space names. It's like Rocket Labs. Even if you think space is the next frontier, it can't just continue to run on fumes and run on this theory that we're going to be like building on the moon or Mars or whatever the fuck. Like at some point, like, that actually has to happen. Otherwise, these things are just going to completely implode. But all these things just keep running ahead of themselves, like kind of Joey pointed out earlier. And it's funny, like I guess kind of even you could probably even point to Bitcoin. It's like when you have this hardcore belief that something cannot happen,
it happens.
It happens. Like, I don't think there's anything, like even just looking at Bitcoin, I don't even think there's anything wrong with it. It's just, it ran and now it's pulling in and it's consolidating and, biding its time.
Yeah. Bitcoin. Yeah. I would not say you're wrong there. I would say with the whales are starting to buy more, and they're kind of like the guys that hold are holding now. It's like climb up here. But
if you remember when price like cleared 100K or like 75K, like somebody might put out a chart and be like, hey, we might pull back to 60, 70K, whatever. And like the amount of like just hate and attack that you get for even posing the possibility of something like that happens. Yeah. And then sure enough, like it pulled in. Like it's just
one thing I was thinking about the other day was with I initially got excited about 24-hour trading. And then I was just thinking more about it. First of all, it's nice to have the weekends to be like, all right, I can just step away now and I'm calm. But with 24-hour trading, I think that's going to kill retail more than anyone, because like we don't have the algorithms at 4 a.m. when we're sleeping, and if a bomb drops, they do. And so I'm curious your thoughts on 24-hour trading.
It's synonymous or like a parallel to the K-shaped economy that I think people talk about. I think that there will be periods of time where the intermediate swing, like Momo trading, will be great, probably like it always has been. But I think that the guys that are super short term, that is like day trading, or the much longer term investor are those that are going to truly thrive on more of a probably consistent basis. Because again, if I don't know, Iran drops a bomb tomorrow and the S&P takes a 10-20% hit. Like if you're a long-term investor and you're perpetually dollar cost averaging, you want price to pull in, you want it to ebb and flow so that you keep your cost basis down. So, and on top of that, if you are in those long-term boats, like you're looking 5, 10, 20 years out, you're not looking at tomorrow. So if you weren't looking, if you're not that short-sighted, why would anything that really happens today or tomorrow really, I guess now I'm kind of going theorizing. But.
Well, or in this 24/7 world, you just have to have your AI agent set up on Robinhood.
Yeah.
And they're the ones hey, I trade from 8 a.m. to 6 p.m. and then your time to run my account is this time to this time.
That's a great idea.
Give it very specific things. If there's a major geopolitical catastrophe, give it all the guidelines because it has to follow them. Until we see the rogue AI agent that loses millions of dollars on an account or something like that, but haven't seen anything like that yet. But I feel like that's where all of this is going. Is like the humans run the account from this time to this time, then the AI agent runs it overnight.
I tell you,
fun and games with Trump API, and they beat you.
Yeah,
the volatility at the open, as of late, I mean, I started trading in 06, 07. I haven't seen like the opens this volatile since I don't remember a time other than pre like full on electronic trading. Because we still
you make a good point. It was always normal if we open red by like 10 a.m. we were deep red, but it's been very rare that once we open positive we get like that, because that happened to my account this morning. Like I open up and then it was just straight up. And then we started coming back down, but it was crazy, that spike.
Mm.
Yeah, I don't know what to necessarily point to other than if the more that, I mean, the funds and DES have always had more or less black boxes and automated trading systems, but as they are becoming more popular and mainstream, I suppose maybe is the right word. Like you have to be looking at charts and price in almost a different way, because if you're used to putting, let's say, trail stopping or putting stops in as protective measures in a traditional sense, where like let's say under certain pivots or wherever that may be, we're talking about the bullshit that happens in the Forex markets where they overnight thin trading, they can push price wherever the fuck they want, run your stops and then reverse price. And like, who are you going to go cry to? Like, you don't have anybody to like. So back to like the 24/7, I was like, I that's kind of the, I don't know. I've known several guys that trade Forex over the years, and just the stories I've heard, whether they're true or not, just always sound insane and dirty. So,
Joey, what are your thoughts on it? Can you pull up Celsius? I haven't talked about that for a while. Because I was like, oh, man, all these day traders are just going to be chugging Celsius and having to stay up late at night. They're down 40% on the year, I saw. But do you think that, because I'm seeing them more and more, so like if you're just like at
the gym every day, it's either Celsius or Alani in people's hands, which they own Alani. What's crazy is, I mean, we first started following the stock split adjusted $1.50 or so,
like 30 cents or something stupid.
Yeah, and I think dating back to when I first started following it was under $1. You got this trading at 16.5 times next 12 months earnings, 2.6 times revenue. Like it's cheaper than it's ever been in its history. A $6.9 billion market cap. Wow. I mean, what
do they have hot chips like Monster do? Like Monster does in Red Bull?
What's that?
Does Celsius have like hot chicks, running around?
Yeah,
Celsius like Monster and Red Bull.
They've got all the. So what they do is they do like brand partnerships on TikTok, Instagram, and all that stuff, and they have to. Yeah, it's the same. Young people sharing. They used to have where people had like the little desks at gyms and stuff. That like it goes way back to they would go to like track events and they would have their kids hand out cans because people wouldn't turn away a kid handing them a sample.
Celsius?
Celsius, yeah, they had to do that.
Damn.
Yeah, so no one would take the cans from the adults. They would have their kids hand it to people. And my friend that worked there way back, he's now retired because he made so much money working there eventually. But yeah, this went from like piss water that no one wanted to the hottest fitness trend. But then it's just faded off since. The problem is it's trading at its cheapest valuation, I think, of all time now, because of how the stock's been trounced. Pepsi still owns a good chunk of this. I mean, it would only make sense for Pepsi to come in and just buy the rest. But the problem is Pepsi offloaded Rockstar, which was one of the worst deals they ever made in their history. It's very small, though, in comparison. But they offloaded Rockstar into Celsius's portfolio. So then it'd be weird that they acquire Celsius and have that. I thought they'd hand it off to Celsius, make Celsius kill it off, then end up acquiring. But I don't know. This one makes too much sense for them to acquire. But if not, the problem is like you need some sort of catalyst to get this thing going. Like every earnings report, still explosive growth, just the market doesn't care.
Yeah.
So once the market starts caring and this starts getting some sort of retail attention, then we could jump on board. But you can't buy something because anytime I buy something, like this should be trading at this, and like the market doesn't understand it. Like, but it's been clearly shown in the earnings reports for the last 2 years, and the stock market just doesn't care. That's when it's like, okay, maybe I just revisit this. And I mean, when I first started following this company in 2008, 2009, they were like an OTC listed company, ended up getting delisted in 2016, came back to the public markets, and still for years I watched it and it did nothing. And so it might have been on a watch list for 4 or 5 years before it was May 2020, maybe May 2021. They had this quarter where it showed 71% growth, and the stock popped from $4 to $5.80 pre-market, and then it was finally the time. So it just took
on the podcast a few times.
Yeah, it took years, but then it finally took off. So like you could be in another situation where this thing trades sideways for years and then finally does something.
Yeah.
Why is Monster behaving in a way that Celsius isn't? Like, why? Do you have any
I don't know.
idea?
They're growing half as fast, and I think their margins are I just don't know. Maybe just having Coke as your distribution partner makes Monster better. But yeah, if you look, you compare the growth at each company, it's wild that Celsius isn't trading at, twice the level it's at.
I see a lot of people drinking. I mean, it's obviously this is just my eyeballs, but I don't see anyone drinking Monster. Maybe it's in different areas of the world, but
see, I also have to factor that in. Like I'm around very healthy, active people most of the time, so they're drinking Celsius Alani. But maybe if I hung out places where some slobs were, maybe I'd see more. Yeah. But like even then, I've seen fit people drinking Monster, so it's not like it's an unhealthy brand.
Yeah, interesting.
So I had I don't know if this is true or not. I had a buddy of mine tell me that the reason that like Monster, for instance, it's so acidic that if you have it kind of sitting in your system and then go try to eat, like you won't absorb like any of what you eat. It'll just break down that food faster than like what your stomach normally would, and it just kind of runs. Yeah, I don't know if he was just trying to scare me. Like when I was in my 20s, I'm pretty confident that I had a minor heart attack. Like I was drinking like 4 Monsters a day when I was like in real like grind working mode from sunrise to 2 a.m. I was a very unhealthy individual.
Well, I think what you're saying could be true because I saw this news article the other day. This doctor prescribed Diet Coke to a woman who had this
Oh, okay.
Like lump in her stomach, and over time it just so you could be onto something here. Everything that we thought that Diet Coke was bad for you, Monster, it's actually curing cancer now, and and freezing my computer. I did buy a new computer. I don't know if you guys can still hear me.
Yeah, I got you.
I'm frozen.
Yeah, you are frozen though. Joey, you into any like pre-workout crap, or like what's your kind of stack as far as like do you drink energy drinks or?
Yeah, I'll have to send you. I really like Transparent Labs.
Okay.
They make like a bulk pre-workout, and it's mainly because, I mean, this is gonna sound like a freaking ad read for the company, but it's basically like only the stuff you actually need in your pre-workout with all the like the garbage fillers added to it.
Sure.
So some of the fitness influencers I follow were high on it, so I was like, all right, let's give it a try. Very clean label. Beta alanine I'll add to it just because I like, you know, like the face melting feeling with the pins and needles. So like I'll add a little bit into there, but yeah.
I like to not have feeling in my fingers. That's when you know it's really hitting, you know?
Yeah.
I mean, I drank pre-workouts when I was in my teens, early 20s, like just the most absurd names. And it's like, why would I put Hemo Rage was one of them that was spelled like hemorrhage. And I was thinking like, oh, this is awesome. It was one of the best pre-workouts.
Your brain will literally bleed out here.
Yeah.
Dude, I had
the
it once.
Original White Flood, that thing, dude. It was like $20 for 60 servings. You could take that and run a marathon without prepping. Like that's
I took it once, and not that one, but I took one pre-workout. Thought I was having a stroke. Like basically pissed myself at the gym. And I go, I think I'm good. Just drinking water here from now on. But I was thinking, Joey, you're not Jody, you're Joey. The Daily Stack, we should just pivot to peptide podcast, right? You're like, isn't that what they call it? The Daily Stack?
Pretty awesome. We just run our labs. We start something, then we run our labs again.
Yeah, no, it was good. All right. Any last words since we started the podcast? Any changes in the market that you're seeing?
No, I would just, again, kind of back to Joey's point, like protect your mental capital. It is going to be a wild week. And even if you are maybe trying to take stabs at catching that knife, just take smaller size perhaps, but your money, your problems.
I love it. Joey, any last words here?
The market just seems more skittish. I mean, we started this 2 or 3 weeks ago and the market was still kind of raging higher, and it's been pulling back pretty hard. This week will be very telling as to, do we bottom out? Was last week the bottom? At least in the near term. It's just there's too much that's going to happen this week for us to not change the trend. Like either the downtrend's confirmed and just, it's like elevator down again because people get so spooked, or things are much better than we expected. So yeah, keep an eye on all the headlines. We got FOMC Wednesday, shitload of earnings Wednesday and Thursday after the close, GDP and PCE, I want to say, on Thursday morning. So it's like, of course, I'll be on a plane Thursday morning heading to Jackson Hole. So
yeah, I'll be in Denver Friday over the weekend, so I won't be around Monday. I think I told you.
Be traveling during all this chaos, and Reddit earnings Thursday after the close, which I have a very large stake in. So it's not like being not at home changes anything, but it's like having the whole setup as opposed to trading on your phone and laptop just feels completely different.
So the Reddit news they came out with, just to wrap this up, that was on Google earnings, which I thought was strategic. Like it wasn't just a random.
It got leaked. They didn't intentionally release that.
Okay, so it got leaked. What I will say, maybe they had additional confidence before they did that. So maybe their earnings will be very strong if they felt like they're in a position to.
Well, Jonah had posted. So of course, Jonah has a hedge fund, so he pays for a lot of very expensive research. And he had tweeted out like what Reddit is trending towards as to what the data that these firms have suggest. And yeah, it's a massive beat, which likely goes to raise. See, it kind of goes back to the thing, like, did they leak it ahead of earnings? One, because you don't want to have a beat and raise quarter and then put that in your press release and have it be a shock, because then no matter what you do that's good, they're going to focus on this one thing. So there's a quarter they had, I want to say it was last year. Incredible quarter, beat and raise, but they said something about a Google algorithm change negatively impacting their growth. And it had popped after hours and immediately just sold off everything on that one line. So I think they learned from that. So they wanted to get it out because they might have another beat and raise and then say, yes, ongoing discussions with Google, however, internally maybe it comes up on the conference call. It'd be dumb to put in a press release. But yeah, I think they wanted to have those weak hands shake out ahead of time, so then they're not shocked going into this quarter and have it overshadow.
Amazing. Well, boys, enjoy your travel. Thanks for popping on. We got our next guest, Varda Pandey, who is the founder of Pandemonium. She's 15 years in macro, working across Asian rates, FX, derivatives, global macro clients before turning her attention to those same tools applying to Bitcoin linked corporate structures. So we're going to be talking about MSTR. Hopefully finally get my answer of what's going to happen here with strategy and with Bitcoin. So if you guys want to listen in,
her, why would anybody own MicroStrategy over Bitcoin?
Well, we'll bring her on right now and we'll get into it.
No, I'm with you on that. I think we're on the same page. I'd probably short the stock and own Bitcoin.
Yeah,
if
I
had to play this
done this for 15 years. I never understand when people want to own MicroStrategy over Bitcoin.
Yeah.
I love it. Well, I'll let you guys hop. We'll bring on Varda and we'll jump in right away.
Sure.
See you, Jody. I'll boot him off. There we go. Sorry about that. We were just finishing up. So I will get this changed here as you talk in the background, just for the Amazon I'm playing producer, unless Jody's still on.
Absolutely. And you have to give me an alert when we are recording. Are we?
We're live right now. So I do apologize. Usually we have a little gap between, but we ended up talking through. So Varda, I gave you a quick introduction, but why don't you share with the audience as well, just your background, because I think it does set the table for the conversation we're about to have in terms of, you know, your 15 years in macro, looking at FX, looking at things more holistically than what we just came from, which is day trading, and very different overall. So as you talk, I will get your name up here on the board. But yeah, if you want to quickly introduce yourself, that'd be great.
Absolutely. Well, thank you. Thanks very much for, inviting me and offering your platform. Delighted. So I have been with markets as a markets professional for the last 16 years, I'd say. I started out as an economist. My academic training has also been as an economist. I'm a master's in economics. I studied all through in Delhi University. Then moved out into macro research, worked with a bunch of financial institutions in India. From there, moved to Singapore. This was back in 2015, so well over 10 years here. And the intention, of course, has been to continuously learn, to keep being the student that I was from the day I started. And the exciting part is through these 15 to 16 years, there was no boredom, never any lack of novelty, I should say. Started out as an economist, did a little bit of risk and strategies, moved into sales trading very quickly because I wanted to be more in touch with the pulse of the market, more in touch with market participants, traders, asset managers, traditional long-only funds, credit funds, and so on and so forth. I was lucky enough to have that kind of exposure across multiple client segments, which continued till the end of 2023. Call it, I think it was just a conscious decision to take a break and to do something of my own, to bring in some innovation on the back of my own learning, something that I could contribute back to markets. And so, which is when I decided to take a little bit of a break. Pandemonium actually happened during the break. Pandemonium is my way of maybe, giving back in terms of my practical learnings. It's not preachy. It's educational material, yes, for sure. But it's conveyed in a manner as if you're sitting in a dealing room right next to a trader and going through these products. So it assesses every product, every market event in terms of cash flows. And when you see for yourself how money changes hands, how cash flows turn from positive to negative, you have a much better objective assessment of a certain market situation. And once your objectives and concepts are clear in a certain situation, you're in a much better position to have an informed opinion. So my intention was just very simple here. Throughout the jargon, or even if there is jargon, explain it as simply and as intuitively as possible, so people don't feel intimidated. I remember when I started on the trading floor, I surely was intimidated. I believe there is not much of a format where somebody sits you down and takes you through the whole training. So I thought, why not? I mean, there are people who are aspiring to be a part of the industry, and those that are already a part of the industry who can potentially benefit from something like this.
Yeah, I mean, I started my career as a retail analyst, bringing on experts like you during COVID, right? In 2020, I just was bored, and and during the day I wanted to get into day trading. And that was kind of the only thing that was open for the most part. Like, it felt like, living in New York, I couldn't really go anywhere. And so we started day trading stocks in a group chat it started with. Then I, said, hey, let's start a podcast on it, bring on some experts. And I've learned so much just from other people. And we're living in this age where retail traders are just, they're actually having some effect now. And I think it was 90 million something wallets, or not wallets, 90 million accounts, brokerage accounts had opened up, over the past couple of years. And so retail is starting to get into this a little bit more. Hopefully the education systems as well teaches people finance and not necessarily the core algorithms now that a lot of these agents can do for people.
Yeah.
I think it is imperative that we get into the youth early, teach them about credit cards, teach them about finance in general. Today, and I brought up Pandemonium here as well, so I'll tag it after this episode. But we're going to focus on strategy, part 1, part 2, and part 3, if we can get into it.
Absolutely.
Definitely recommend the reading. I took a look at 2 of the 3, so I still need to read part 3. But I do think it was fascinating approach. And so we'll talk a little bit about it right now, obviously. And so, one thing with strategy, like the question that Joey asked you is, why buy strategy, this levered, stock equity versus just buying the Bitcoin. And present day, just to give context for everyone, Strategy's cash reserve, pulled this up here, 3.75 billion after raising 544.5 million last week through the sale of more than 5.4 million MSTR shares. These ATMs did work when Bitcoin was hot and everyone was this was kind of a new idea for people. They had buyers to go in and buy those shares right away. Now they introduce STRC, STRD, STRK. There's a few other ones as well that are these preferred shares, which I got excited about, but I did have the inkling. I was like, this is going to kill off MSTR as a whole. So from your end in capital model, like in plain terms, I want to make sure we're, working off the same map here, but could you walk us through Strategy's capital structure, in the way that a fixed incomes or derivative person would read it, not in the way someone like me, a Bitcoin maximalist that maybe on Twitter thinking number go up all the time. But like, where does that reflexivity, actually live? What point does the structure that was designed to be essentially self-reinforcing start to reinforce itself maybe in the other direction, which we've started to see here today?
Yeah. No, thank you for that question. I think you have gotten to the heart of the issue from the get-go. Okay, so let's first understand the foundation of the model, of the capital structure. So the idea of the company came about on the back of an ideology, right? There was massive fanfare around Bitcoin, and the person who started the company was equally a fan, if not the biggest fan. And the financial engineering, as we call it, around Bitcoin was primarily motivated to offer something of a proxy, a leveraged proxy of Bitcoin to all maximalists, right? That's how I read the intention, the initial intention. Now, there are two ways to think about it. So ideology, right? We've already spoken about it. Because it was ideology, you picked Bitcoin. Had it been just the financial engineering on an underlying product, you probably would have picked something with underlying cash flows in it, where you actually have legal claims on the underlying cash flow. Before I move ahead, there is this little important point that I'd like to put forward. My experience in the crypto side of things, I'm still a part of traditional finance. I don't think I'll ever leave that. But now from crypto side of things, the biggest difference between a crypto asset and an asset from public markets, traditional finance public markets, is your legal claim on the underlying cash flows, right? Even if I were to speak about altcoins, so if you actually go through Basel III capital requirements for banks, they have different capital requirements for crypto that's backed by redemption claims or some claims where you can tie the value to the underlying asset and hope to get your money back. And then crypto that's not tied to any cash flow, right? Bitcoin falls in that category. Not only do you have an asset where you have no legal claim, if at all there were underlying cash flows, there are no underlying cash flows. It's also a highly volatile asset, right? Annualized vol of 70% or north of 70%. So you have a capital structure that's on an underlying, which is extremely volatile, where the motivation is to constantly issue. I'm talking simplistically first. We'll get down to the weeds in just a bit, where you're constantly issuing equity to buy Bitcoin, right? Fundamentally, that cannot keep the mNAV significantly above 1 for long periods of time, because you're intentionally on the opposite side of the trade. You've already initiated a self-defeating loop for the longer term. Now, we can, of course, define longer term depending on market conditions. But if you were to ask me, the reflexive loop for the long term stays, it's structural. If I have to think about it short term, now I have a structure which is made up of equities, convertibles, and preferreds, right? Common stock, largely owned by Bitcoin maximalists. That's where you get all the upside of a Bitcoin price appreciation or non-linear downside of the depreciation. If you own the preferred or the convertible, let's go one by one. Convertible, mostly people bought the convertible to play the embedded volatility of the option in the convertible, right? Because there was an option to convert it back to the equity. Huge chunks of the convertible debt was bought by algo funds, high frequency traders, hedge funds who were trading the volatility arbitrage. So you're structuring a product where you're structuring it by taking an implied vol, which is meaningfully below the realized vol in the market, which is actually meaningfully below not only the realized vol in the market, but what markets treat as average implied vol. So I'm automatically structuring something for you which makes you money on day one. Now imagine if the realized vol actually blows up, which it did most of 2024, 2025, even parts of 2023. The best performing MSTR offering was the convertible debt, because people were constantly delta hedging, that long optionality that they had. And because the realized vol was meaningfully above the implied vol that you actually bought, and that implied vol in any case was below market mid, you just kept making more and more and more money, right? Which is why the convertibles that they issued were very close to zero coupon. Investors were completely okay to forego the coupon to get access to that optionality. That's convertible debt. Then you've got preferreds. again, people who buy or the investors who bought preferred are far from maximalists. They do not get the upside of Bitcoin appreciation, price appreciation, but they do get the downside when prices collapse. I mean, I'm not saying the downside that they're exposed to is as big as what a common stockholder is exposed to, but when the operating cash flows of the company are directly generated from Bitcoin prices going up, and if Bitcoin is not going up, the company is struggling to pay dividends, you're automatically exposed to that Bitcoin price related credit risk, right? So that's your preferred segment. Now, you join all of this and think about the motivation of this structure. The only way this loop is accretive, or the flywheel is positive as we think of it, is when the BTC yield is positive. When for every unit of share that I dilute, I'm able to buy a higher value of Bitcoin. Right? That's how your BTC yield is positive or accretive. Now, there are two things to keep in mind here. As you go along and build this framework, and as your BTC stack increases, it gets harder and harder to generate a higher BTC yield till you do not buy a significantly larger amount of Bitcoin. Okay, that's one. The second thing is, if Bitcoin price is going down, we are in any case, given it's a levered bet, the downside on the MSTR stock, or what the common stock holders lose, is non-linear. They lose exponentially, and they probably gain, if not linearly, less than exponentially. This setup is
flat, right? Even if it's flat, they still have to pay those dividends out.
Absolutely. So, absolutely. Right. I mean, now, given the state of the capital structure, we could be in a situation where your mNAV is above 1, and they issue equity, and yet, while you still add overall leverage to the structure, the incremental leverage is smaller. You see what I'm saying? So let's just say I issue shares as part of the ATM equity issuance program when the mNAV is at 1.5. Now, equity is issued, brilliant. You've bought more Bitcoin as opposed to what you could have before the issuance. BTC yield is positive. But now the market foresees that there's more dilution coming because the mNAV is meaningfully above 1. Right. You're constantly sort of reinforcing this downward bias to the mNAV. I've added leverage at 1.5, but the moment I issue, that 1.5 on mNAV goes down to 1.2. So my aggregate leverage has gone up, but my incremental leverage has actually not gone up as much as I would have expected.
Interesting. I mean, now it's at 0.6, I think it was.
Yes, 0.63, or actually there are multiple definitions of it, right? I even saw something below 0.5.
There's the mNAV EV, right? Enterprise value divided by
enterprise value. That's right. That's right.
They have the mNAV, the basic, and then the diluted by using fully diluted market cap includes options, RSUs, convertibles, and warrants.
Correct.
So the mNAV EV is at 1.03, mNAV basics at 0.64, and mNAV diluted is at 0.70 right now.
Yeah. And so think of it this way, right? 5 or 7 years back, if I had to speak about an accretive mNAV that's even slightly above 1, you probably could have expected markets to still accept that offering, to still be happy with a BTC yield that's that's coming at a 1.2 or a 1.3 mNAV. Today, because the balance sheet is huge and you have all sorts of obligations, you've got fixed obligations, you've got obligations that accrue every month, then you have chunky ones that are coming in, both in terms of redemption and in terms of large dividend payments. Today, that 1.2 or 1.3 is easily a higher number. You see what I'm saying? So for it to be accretive, I need to be closer to maybe 1.5. I remember, I believe this was the Q1 2026 earnings call where the management said that 1.22 on the mNAV is probably the threshold where this starts being accretive. But now that we want to talk about it as a macro investor and not as a standalone crypto maximalist, we need to think about the macro backdrop in which this issuance happens, right?
Mm-hmm.
We are in a high inflation backdrop, and it probably gets worse from here. I don't think it immediately gets better. Even if it gets better, probably does early next year, not at least for the rest of this year. Mm-hmm. We have a Fed governor who is extremely tied to the idea of a 2% long-term inflation goal that needs to be met. We've not met it for the last 5 years. That essentially means that expectations of hikes will be priced in for the near future. And liquidity, global liquidity, according to me, I mean, that's a view that I have. It should remain tight for the next 6 to 9 months. You already see that in hyperscaler credit spreads, the bond issuances, the debt issuances that they've been doing to fund their AI spending, right? Those credit spreads have started going up. What all of this means is cost of leverage is going up, right? So you cannot fundamentally have an accretive capital structure for strategy if the cost of leverage is higher than the rate of price appreciation for Bitcoin, intuitively speaking.
Yeah, I mean, and we'll see. I mean, we were just talking about Amazon, Meta, Microsoft, Apple are coming this week, right?
Yeah.
Which could shift the market dramatically either direction. What do you think where the cost of leverage is like sitting today? What do you think Bitcoin? You said over the 6 to 9 months range for MSTR. I think you're alluding Bitcoin and MSTR very in tandem there. But where does like Bitcoin need to go, do you think, in the next year for the current structure to be cash flow neutral? Is this somewhat of a realistic path? You're saying probably in 2027. Like, I'm curious where because I've gone and seen Sailor talk, and I'm sure a lot of the listeners have heard him, speak, and he's a damn good salesman. I will say. He blew up MSTR.
This person has to be a great salesman. Yeah.
I mean, you look at the stock that was very zoomed out. He blew up MSTR once before. Came right back. And then it seems, I mean, it's pretty blown up now. I think 77% down from the high or something, right? So, where does it go? Do you think MSTR completely blows up? And then what is the impact on Bitcoin? I don't know if they'd have to start to obviously liquidate that throughout. They have a long way to go, right? They have several 100,000 Bitcoin right now. Curious your take on that. If Sailor's gonna, a year from now, 2 years from now, is he a mastermind, or is he on the cover of Forbes with jail bars, in front of him?
Well, jail bars maybe is going a bit too far. I mean, I hope that doesn't happen to anyone for that matter. Okay, I think arriving at a specific Bitcoin level just on the back of balance sheet arithmetic is very difficult at this stage. Mm-hmm. This model completely depends on access to funding markets. That's plain and simple, right? The access got harder, has been getting harder, because he's been adding more fixed payment obligations to the balance sheet. Now, you can call them pivots. So I've written about this. When he switched from collateralized debt to preferreds, what was the motivation behind it? In a collateralized debt, you typically have unwind triggers, right? Mm. Your unwind is actually tied to a specific price of the underlying. So if Bitcoin, let's say, went down below a certain level, it could be, say, 30, 40, 50,000, whatever that level is. Right below that level, the entire facility needs to get unwound. Mm-hmm. In traditional finance, going below that specific level is what you address as gap risk, right? Your risk is acute and it's tied to one specific level of Bitcoin. He switched from collateralized debt to preferreds unsecured debt. What he ended up doing is he ended up transferring a huge chunk of risk from strategy to the investors on preferreds, right?
Mhm.
Now, what you've done is you've switched the risk from being acute and specific to one level of Bitcoin to being chronic across all level of Bitcoin prices, right? If you're asking me what would be that level of Bitcoin where we go cash neutral and the positive flywheel kicks in, I can probably give you a range. So definitely north of 100K. And the range needs to be wider. I think we need to be between mid to high 100K. That's because access to funding is not just a strategy specific aspect today. It's a function of macro. It's a function of how much liquidity does the system have access to? Where in the pecking order is strategy versus, say, the hyperscalers or people who are raising money through equity and debt? What is the sentiment for strategy? Do people actually believe in Bitcoin going up one way higher? I don't think that's the case, but that needs to be considered as well. Then we need to understand what are the future expectations around dilution. What are the expectations around would he have to come back to accumulating more preferreds, accumulating more fixed paying debt as opposed to equity? All those factors need to be kept in mind to arrive at a specific mNAV or a tight range of mNAV and therefore a Bitcoin price. I would say mid hundreds to high hundreds for confidence to return. But all said and done, I mean, we're talking about a cyclical movement versus a structural movement. Structurally, this is still a setup where, I mean, the equilibrium would be to converge to a 1 on the mNAV or slightly lower.
Right.
Think of it. I mean, hypothetically, so we know when strategy, when the business was set up, when the BTC yield was positive, when the business was doing very, very well on the back of Bitcoin prices going higher, one way higher, right? People noticed. Everyone saw the profitability or the scope to profit from a setup like this.
Mhm.
And so you had more and more treasury companies coming up, right? Today you have something above 200 or 250 in terms of number of treasury companies. Now think of it this way. In theory, if they were all identical and if they were all doing the same thing, the potential for that premium on the NAV will be competed out.
Right.
And eventually, longer term, you're looking at something which is closer to 1x. Now, if you're operating your business in a way which is superior to the rest of the treasury companies, which is the case that we have today, then you can probably assume that a strategy maybe trades at 1 or slightly above 1, and the rest of them struggle to come up to 1 or higher than that.
Mhm.
But logically, intuitively, from a traditional finance perspective, this is a setup where the leverage corrects itself on its own. That's because the premium gets competed away. Everyone wants a piece of the pie.
Right.
So yeah, I mean that's.
I was just gonna say that they've. He said he would never sell Bitcoin. Then he said, "I'm a net accretive. What do you say? I'm a net buyer."
Yeah.
And then they switched it from like focusing on mNAV to Bitcoin per share. So he still bought. I think they just bought last week as well.
Yeah.
So it is interesting though. Their average price right now, I was just looking it up, is 70. Let me get it accurate. So average purchase price is 75,476 per coin. So Bitcoin right now is 64 or something. Let me pull that up. Yeah, 64.9. It means they're underwater still. Yeah,
absolutely. On a market cap mNAV perspective, they're definitely underwater. The treasury is underwater, and now given the multiple rounds of pivots and engineering that they've done, it's for them to come back up in a meaningful way, and for people to show confidence in their offerings. we're back to your question on where does Bitcoin have to be for that?
Yeah.
Arithmetically, maybe even 100K is okay, but keeping all the other subjective aspects in mind, according to me, it needs to be between mid hundreds to high hundreds.
Yeah, no, it's a fascinating, and I lived through it. I mean, we went to, I was at the Strategy World where he invited Metaplanet was kind of the other big one. And Metaplanet was interesting because Metaplanet had a unique element where they were based in Japan. If you owned Bitcoin and sold Bitcoin in Japan, it was like a 50% tax rate versus buying Metaplanet. So there was some sort of an arb there. And then the majority of, I mean, you can call, I guess, Strategy is somewhat of an operational Bitcoin, but it's minimal, right? They get like $500 million from their core original business. Do you foresee other, at this price at 64, do you think other, real companies will start buying Bitcoin at this price? Or are they waiting for a lower price? If they were to ever do a treasury where it was looking at just the dollar, how the dollar has been going down year after year, right? It feels like we're in this crazy time period where what happens in the next 10, 20 years? Does the dollar still exist? Are we moving to digital dollars and so forth, right? It feels like, and it's always funny. I joked is like, if every country's down and in debt, like, do we owe money to aliens? Like, where does this money go? It's always like a funny thing to think about. But like, to me as a Bitcoin, I'm a logical Bitcoin maxi, I'd say. I also trade stocks and I don't have 100% of my money in Bitcoin, of course, but in theory, since there's 21 million, 1 million of those are in Satoshi's wallet, right? There's been, I think, 4 million lost. So the number is actually much lower than the 21 million often quoted.
Yeah.
Just by pure supply and demand. I mean, it is based off a belief system, right? That, coming out of the crisis in 08, that governments are just going to continue to print and print and print. Do you foresee, I mean, you're a Bitcoin, you're a believer, I believe, in Bitcoin, right?
I do.
So what do you? I'd like to hear the optimistic end and where
No, sure. And I apologize if I was sounding pessimistic at all. Yeah. No, I think my intention here was to come up with numbers and an objective analysis so people could see for themselves. And if they chose to be pessimistic or optimistic after that, totally up to them. Yeah. Okay. Can we start with dollar debasement, by the way, the whole narrative?
Of course. I think it's important to, I mean, with hundreds of listeners, it's hard to ask the audience where they sit, but I do think it's always important because even myself, who's in Bitcoin every day, I have a good understanding, but not the best understanding. I couldn't go out and speak on it like you can. So welcome. Then.
No, it's very kind of you. Okay, so dollar debasement as a narrative sounds logical. I wouldn't bet on it for the next 5 years, 7 years, or maybe even 10 years. If it's happening, which I know it is in bits and pieces and in pockets, it's progressing at a glacial pace. It's not a trade that I, as an informed investor, would put on and expect returns, even in the next 5 years. And I'll tell you why I say that. The way I think about it is you have a reserve currency, you have a reserve asset, and you have a yield-bearing asset, right? Dollar qualifies for all three. It's obviously a reserve currency. Yeah. And because it's the reserve currency, it's also the biggest financial payments system in the world. It's what global trade is denominated in. A huge chunk of global trade is denominated in. So you've got reserve currency ticked, you've got reserve asset ticked. And now look at the yields on dollar instruments, dollar equity, right? Granted that in the last 2.5, 3 years, central banks have switched away just at the margin from the dollar to gold, let's just say, right? Not to Bitcoin. We're not talking Bitcoin at all, or we're not talking of any other digital representation of money at this point. But central banks are just a tiny part of the overall setup of the overall financial system. If I talk about countries that wanted and still want exposure to US equities for the AI theme, I mean, the net exposure to the dollar has only gone up in the last 4 to 5 years, 6 years. So if we're talking debasement, I think we need to take all these three factors into account. According to me, yes, when the Liberation Day price action happened and we saw people hedging their dollar exposure, their dollar assets, I understand, those were very big moves, but I don't think we saw outright selling in dollar assets in any meaningful manner. It was a wave of hedging, which will continue even in the coming years. No denying that fact. But to imagine a world where net exposure to dollar assets comes down in a meaningful manner to justify the whole debasement narrative in the short to medium term, I'm doubtful. I don't think that happens.
Looking at this chart, I mean, I pulled this up, let me see if I can zoom out for the years. Here we go. This is saying like the dollar's declined, the purchasing power since 1966.
Yes.
90%, right? And this is going to 2023, so we're a little past that. So you're saying you'd argue somewhat against this due to
no. So I agree with this. This is absolutely correct. This is a fact. Nobody can deny it. It's losing its purchasing power, right? But if I had to think of just the purchasing power, I think we would have had a much faster Bitcoin adoption than what we have today.
Fair.
Right?
Yeah.
When we think of purchasing power, now, again, currencies always have to be looked at one versus the other, right? I am looking at dollar. Yes, agreed, it's lost purchasing power, but it's still the most efficient and the biggest infrastructure on the planet, whether, in terms of settlements, payments, you cannot compete with it, right? I am a big bull on the whole stablecoin story. I think that takes on in a very, very big way. I think it's life-changing for countries, especially frontier markets that struggle to have their own monetary policy or, a central bank, so to speak. I am very bullish on the digital dollar, makes complete sense. But when we're talking about debasement, let's just also think about how much infrastructure really have we built on something like Bitcoin, which we think could replace the entire monetary system built around the dollar. Maybe one day it could. I am not saying no. I'm just saying that if I had to take a bet on the debasement narrative, purely the debasement narrative, I'd probably think of a much longer horizon, not the next 5 to 7 years.
Yeah.
10 years and longer, right?
No, I think that's fair. I think the other thing is I always go back to who's got the guns, like the military, right? And so I think that plays a big role. And
yes,
America, we're not so innocent, and wars started pretty quickly when the dollar is at risk.
Yes. Well, thank you for saying that. Not only that, you also have to think about regulations. You have to think about government controls. You have to think about. So, maybe this is like a tiny example. It may not be completely analogous to what we're discussing. When I got exposed to crypto and Bitcoin as a concept, I was not excited day one to buy Bitcoin and hold it and custodize it myself. Right. I did not want to have a wallet of my own. I was very happy buying IBIT. I was very happy, for BlackRock to take care of my custody. Nothing wrong with that. So when you think of adoption, even no matter what the narrative, I'm sure there are people who believe in the debasement trade in a very big way. Nothing wrong with that. I think there are several arguments in favor. We can debate the time horizon for it, but yes, it's moving. It's happening at a glacial pace, but it is, which is why we have the stablecoin narrative and the launch of the stablecoin, actually, not just the narrative, to slow that down. You want to take that trade, the adoption is also going to be glacial. I will not suddenly, get onto an exchange and a centralized exchange and start custodizing my own Bitcoin. I will not do that. Most traditional finance folks will not do that.
Right.
Which is not to say that they're risk averse. The fact that they're buying Bitcoin kind of tells you that they do have a meaningful risk appetite for something like that. But I would potentially move from an IBIT to understanding, okay, how are these decentralized exchanges operating? Do they have the same standards of custody and regulations and governance as compared to, let's say, custody with the JP Morgan, some of the biggest banks, some of the biggest asset managers? Those things will matter.
Well, aren't they a lot of these, like I think 9 of the 11 ETF, or I think it was 11, maybe of the 13 ETFs are custodied by Coinbase.
Yes.
Right.
Yes, but I would be hugely surprised that they do not have their own guardrails protecting it in some shape or form. I would not be surprised. Again, for these ETFs to be absolutely sure of the safety of their stack of Bitcoin, I'm pretty sure they're thinking of it from a very traditional finance perspective. I'm pretty sure they're thinking of it as how a bank would think of it: segregation of client assets. The custodian should not commingle their assets with client assets, and so on and so forth, right? So yeah, no, to your point, I agree. Debasement could be real. Own the Bitcoin, but be informed how you're owning it and in what format you're owning it. If you want a leveraged proxy, maybe strategy was that pure, clean leveraged proxy a few years back. Today, it's more, this hefty capital structure that, they invest a lot more in preserving that capital structure really than focusing on accruing the compounded returns of Bitcoin.
How if Saylor came up to you today and said, "Here's $50 million, fix my company," like if you were hired on as a strategic consultant, how would you tell him to either like unwind some of these preferreds, or what would you tell him? Big question, so feel free to take some time to think.
No, absolutely. Now, a couple of assumptions which I think that the company made just when they started. The 4-year Bitcoin price cycle, I don't think exists anymore. We might have had 3 such cycles, but I don't think it's a 4-year cycle anymore. We've already seen that there's proof enough for that.
I had agreed with that, and I thought the 4-year cycle was dead, but you look at the price, and it's come down 50% from the high here again.
It has, but if you actually try and link it up with the global liquidity cycle, you'd find a better fit as opposed to, Bitcoin specific factors that were governing the price earlier. A lot has changed. A lot has changed when the Fed was hiking in 2022 and 23. You must have heard of how those hikes were not as effective. That's because when rates were at 0 around COVID, and even before that, people had termed out their debt, right? So the incremental impact of a rate hike was not as sharp as it was when rates used to be in single to mid single digits, right? Monetary policy has not been as effective as one would have expected it to be. Liquidity, on the other hand, and I do believe in this, liquidity cycle has been a lot more effective, has been a lot more impactful when it came to governing prices of assets, at least that are extremely liquidity sensitive. Bitcoin to me is probably the most liquidity sensitive asset out there, or any crypto asset for that matter. So, if strategy really had to rethink the whole strategy, they probably first need to shift their thinking around this price cycle. According to me, it's not a 4-year cycle. It's a cycle that needs to be more seen to play in tandem with the liquidity cycle, which is more like a 5.5 to 6 year cycle. And I would also say that, if you're tracking that cycle well, and if you're tracking refinancing requirements of the world, especially the US, between now till the first half of next year, we've got pretty chunky refinancing requirements coming up, right? Now think of it this way. Maybe 4 to 5 years back, strategy was among the few assets where you could expect to make 4 to 5x in 12 to 15 months' time. Today, you have multiple options. You've got the memory chips segment. You've got the whole hyperscaler segment. The whole, race to who spends the most for their AI infrastructure. That's been going on for the last 2.5, 3 years. So my options are many more today versus what they were 4 to 5 years back. So if I really am thinking of building something where people trust me for the longer term, I have to then compare myself not only as a company that operates in a pretty small community. Crypto community is pretty small as relative to the whole traditional finance public markets community. I need to start comparing myself to the blue chip, the big wigs, the maybe arguably even the hyperscalers. So that's important. USD reserves, extremely important. It's only now that they are at 25 or 26 months coverage on their cash buffer. And this cash buffer, honestly, was an afterthought. When they started issuing these preferreds, they did not even think of having any liquidity on the side, to take care of the fixed payment obligations. Which means that all along they were either assuming that Bitcoin keeps doing this and there's absolutely no problem with tapping markets for more and more money or generating enough profits to pay these dividends comfortably. In fact, you would continue to reinforce the same pattern, the same loop over and over again because, adoption will be a lot faster. People will be a lot more excited. The whole the crypto infrastructure will outpace expectations of what we had 4 or 5 years back, right? That didn't happen. So again, same thing. You must have read about stranded capacity, right? They talk about the capacity that they have for their at-the-money equity issuance, the capacity that they have to issue more and more preferreds. Those capacity numbers were arrived at the bull market. At the time of the bull market, there was, when they were thinking of these numbers.
Right.
You cannot have stale assumptions. So be more realistic, more in line with how markets have shifted, markets have changed. More cash buffer for sure. Reduce leverage to a certain degree. I mean, if you want... because eventually this is a common stockholder play. I mean, if what you're trying to monetize is Bitcoin price appreciation, then effectively the participant that wins big is the common stockholder. It's not the guys who own the preferreds or the convertibles. If you want those guys to win big, then that the leverage has to be brought down, at least in terms of fixed payment obligations to a certain degree.
Well, they keep running ads for STRC. I think it hit 85. I didn't see where, pull it up real quick to see the price of STRC today. 88 now. So it's still got a long way to go back to 100, or for those listening, they want to keep it at 100 anytime it goes below. The idea was to raise the rate, so to attract more money in. And then if it goes above, then that's when they'd issue shares. They did come out recently saying they will allow some buybacks too of MSTR. I don't think they're in the position to do that today. But it is very interesting. You mentioned the AI trade, which I do want to touch on here. Michael Burry's got a big bet against Micron and NVIDIA right now. Is he a one-hit wonder, or do you think he is onto something? We saw this with the .com. I just saw a interesting YouTube about this, but like everyone talks about the .com bubble, and they talk about the pets.com. They talk about, a few other stocks, but then Google came out of that. Amazon came out of that, so there were some like big winners out of that. Do you think we'll see a similar here where there is a big bubble with a few AI stocks, and then there's the 10, 20 winners that do arise that win big?
So two things, right? I read something interesting. If people end up comparing the current AI bubble or the AI regime to what we had back in the late 90s, the whole internet wave, the bull run back then. Two things. One, companies that were investing more and more in the internet era, just when it was coming up, were not as big, in terms of financial might, cash flows, and what have you, in comparison to the hyperscalers today. While they were doing their IPOs, you were still not sure whether or not this would be one of the big winners.
Yeah.
Today, when a company does an IPO or a follow-on offering, you already know they are winners. You already know there are these 5 to 7 guys who have the financial might to spend big. Even if they run down their cash flows, their other businesses are profitable enough for people to believe that if the spending were to go on for the next 5 to 7 years, I'd still buy it.
Yeah.
I don't think anybody has a complete idea on how AI will pay up, how the spending would be monetized going forward, or the pace at which it would be monetized. But at least for now, we know who would be the up-and-coming winners. We are more aware of that today than we were back in the late 90s, 2000. That's one. The second thing is, this is definitely an earnings bubble. Factually, statistically speaking, there is no doubt about it. And then there is an accounting nuance behind that, right? Suppliers of AI equipment and memory chips are the ones that are showing a massive boost to their earnings. Not only because there's limited capacity of what they produce and the excess demand for what they produce. Chipflation is a term that people have started using in a big way, right? Inflation in the chips market. People who want to buy those chips, and I'm talking about the big guys, the hyperscalers who are buying it from the suppliers, their purchase of the equipment and of the inputs is capitalized spend. Is shown as capitalized spend. People who are being able to sell their products 40, 50, 60% higher in terms of prices, it's an immediate earnings boost for them. Their top line jumps by 50, 60, 70%, right? So what you have here is, on the one hand, the guy who's paying 50, 60% higher is waiting for that data center on which, they're spending so much, that will only come that will only come into being in the next 2 to 3 years. That's when they start amortizing this expense. But the guys who are actually supplying equipment to build those data centers have a massive earnings boost.
Yeah.
Which is why we have this bubble. One of the big reasons that we have this bubble. If there comes a time when the pace of this spend starts coming down, or even comes to an abrupt halt, which is more of an extreme scenario, difficult to imagine. But let's say they start reducing the pace of spend, earnings would come down meaningfully.
Yeah.
And if earnings come down, we know this is a market that's over-owned. We know we've sort of overplayed the whole narrative because we've not yet seen significant benefits, significant rewards, income, profits that should have come by now or should come over the next 2-3 years. We've not seen it yet. So this is anybody's guess. This is people are forecasting in using different models. I believe Alphabet posted the first ever negative cash flow in their results. First ever negative cash flow, free cash flow. And the stock responded by going down 6 or 7%. But then there are still people who believe in the AI story, and they still want to buy Google. They're still buyers on dips. They still believe that the spend will show results the way it's supposed to show results to meet these bubble kind of expectations. We'll have to see. I'll just say 2 things. We probably know, 1, the winners, and 2, this accounting nuance, when it does correct, and I think it will, It may not correct, by the way, for the rest of this year, because inflation in the AI equipment category should stay for a good chunk of even next year.
Mm-hmm.
Again, it's a view. I could be wrong. I am not an economist who's looked at this sector specifically. I'll tell you what I've observed. For a good chunk of 2027, the shortage in the memory space at least should stay.
Mm-hmm.
Yeah, that's the way I'm looking at it.
Yeah.
So would I still buy, semiconductor ETFs on dips, on major dips? Yes, I probably would.
Yeah. I mean, it reminds me of the internet in terms of like a technology boom, right? And I think you're right. Like the incremental, when you talk to companies, they're not seeing such massive incremental gains. Like the people that are in the seats now, they're working. I'm working just as hard. Like I find new things. My output is a little bit more, but I would say that it is interesting to think about, even from taking a step back, even more macro, of like companies are not hiring a lot of people coming out of college now. I think I just saw a report on that too, that like it's not necessarily the 2008 crisis yet, but interns and like the junior positions, those are kind of going away just because now, you can go do that yourself. A director or an MD could go in and type something up that they used to send off to an analyst, right? So I'm curious to see how that all plays out as well. And, and we can get deep into like the rise of almost like the socialism from these younger generation, right? But that's what's kind of happening right now is you go to college, you have $200,000 of debt, you're expecting to get an amazing job and you're not, and then that just kind of cascades all the way down. And then people don't have money to spend, so it's like you kind of zoom out. I'm not an economist in any capacity, but it is interesting to see this K-shaped economy like really take shape.
It is. And what you're saying is very, very relevant. It's because of that phenomenon, people are more driven by emotion than by objective assessment when it comes to investing.
Yeah.
When people bought strategy, these were massive Bitcoin bulls. Nothing wrong with that when you see asset prices going up. But when it starts coming down, then you also have to be aware of how much could you lose, or what are you paying up for this optionality, for taking on this leverage, or for buying something at a premium, which you could easily buy in the spot market.
This is fascinating. I definitely want to bring you back. Rapid fire to close this up. I'm just looking at the time.
Sure.
Here. Bitcoin at the end of the year, higher, lower, or do you think it's going to kind of be flat by 12/31?
Okay, I'd say okay, it would be on the right side of where it is right now. So I'd say maybe closer to 75 to 80K. But having said that, I do expect it to go down maybe towards 50, 55K before it starts going back up. If liquidity was really a support for the next 6 to 9 months, 12 months, I probably would have said north of 100K, but we're unfortunately on the wrong side of the liquidity cycle. So yeah, I'd say maybe closer to 75 to 80K.
Okay. That's roughly where I see it too. Does STRC trade back above par this year, do you think?
Difficult. That'll be difficult. STRC trading below par is more a vote of no confidence. I think the math behind it has been thrown out of the window. People already know the whole automatic, well, it's not automatic, but the whole stabilization mechanism that the company intended for it has not really worked. They marketed it as a digital money market instrument, which of course it is not. So, people bought it maybe on false marketing promises or mis-selling that came out of that. So this is more a vote of no confidence. They're buying it, sure. They're using cash for it. But I don't think it goes back to par or higher.
I had one other one, but it was kind of silly. Just most misunderstood concept for crypto. But instead of that, I'll let you off of that one. Let's go back to Pandemonium real quick just to wrap it up.
Sure.
What is it again? Who's it for? Who should be checking it out?
By the way, sorry, I can still answer your question
All right,
on the
we'll
most
let you do it.
misunderstood if you'd like.
Yeah, let's do it.
Optionality,
Yeah.
big time, misunderstood. I think, firstly, the meaning of optionality, and I found it a little weird. All of last year, I was traveling like crazy. I mean, jumping from one conference to the other, meeting the crypto folks as much as possible, people who were in their 20s, 30s, 40s, 50s. Everyone spoke of optionality as something that you pay for the expectation of the asset price to keep going higher. So think of it as I should price strategy higher today because I expect Bitcoin to keep going up. And so I should attribute a much higher mNAV to it. In addition to the math that I noticed today, I should add I should, boost my expectation of a higher mNAV because I expect Bitcoin prices to go up. That's not how optionality works. Right. If you're buying something, what are you paying for it? If I'm buying the strategy stock at a premium, what's my downside? I think optionality is kind of misunderstood in that regard. People are governed by emotion. People are governed by their expectations of, or an ideal market scenario where, everything's great and this is my best case scenario. And so I love the optionality that I have. Mm-hmm. No, I wish for them to understand optionality better from a risk standpoint. Yeah. What are you giving up to gain what? Mm-hmm. Yeah.
And I'll raise my hand there. I bought originally probably right around here, and then I added quite a bit too at the 300 because I was one of those that I'll raise my hand. I just got out of the conference. I thought Bitcoin is going up forever, and it made a lot of sense, right? So even people that are, I have a lot of friends that know more than me. I have a lot of friends that know a lot less than me. But it is one of those things where you have to. I always say with Joey, who was just on, you say this time it's different, and yeah, every time you say that, the screenshots come out.
It's very different.
my biggest indicator is the screenshots still. So whenever my friends start sending me screenshots of their accounts, I'm like, all right, we're about to crash, pretty quickly here.
Yeah. I just say long term, if the trend is for Bitcoin to go higher, and I do believe in it, I think the trend is for it to go higher, it'll still go through cycles. Mm-hmm. And cycles have no respect for trends.
Right.
So if you want exposure to Bitcoin and you can take the pain of a down cycle and an up cycle, keeping that leverage in mind, by all means, go for it. No problem. Mm-hmm. But if you are someone who's playing the longer debasement narrative, maybe a cleaner exposure is just having the Bitcoin itself.
Yeah.
Right.
No, we always say we're a self-custody. I have some on Coinbase, of course, but I also think the narrative around that too, if the government decides that Bitcoin would be illegal, they start knocking on doors, people will hand over, some people will hand over their wallets, and that could change pretty rapidly too. We'll definitely have to bring you back because I think this story's just getting started overall.
It's getting started, absolutely.
Pandemonium. I'll shill it for you. Just because I know people don't want to self-shill here, but what is it again? Who should be reading this? Is it free? Is there a subscription? I see in the top right. Is that, the different levels perhaps as well?
Yeah. So, okay. So this is right now a repository of about 53 lessons across financial products. It talks about these concepts, not using equations and math. I'm not saying equations are not important, but well ahead of talking about equations, it uses logic and intuition for people to understand how you should think about risk for any kind of financial product, whether it's a derivative or it's a cash instrument, a money market instrument, a funding strategy. So this is a mix of all that, not all, maybe all is too strong a word, but a good chunk of what one needs to know to enjoy being on a trading desk. It's all practical understanding, practical knowledge. There are real world examples, real time examples, in fact, to explain these concepts. Anybody who's either an aspiring finance practitioner or already is a trader, portfolio manager, asset manager, hopefully would find this useful. There are blogs on it. Blogs are, I call them topical because I write on what's relevant at the time of writing it. And they range from global macro to digital assets to, there's a section that should be coming up soon on AI and finance. You don't see a tab for it right now, but I think there's not much out there on how AI is going to interact with traditional finance. And there should also be something on AI versus AI's interaction with crypto, with blockchain. That should be on too soon.
Let me fix that. There we go. No, it is fantastic. And just so our listeners know, this is not a paid advertisement. She didn't pay me to come on here and say, I wanted to shill it for you because you gave such great information, and really viewing this from like an economist. Like I think a lot of people have their 5 to 10 stocks that they love and know a lot about, and too many people forget to zoom out and look at, the M1, the money supply and thinking of just everything that's happening in the world. That
Yeah.
is fascinating, and which is why something I love. It's constantly, you got to play the game and watch what's happening in the news and seeing the overall flows. And so super helpful. But
Absolutely.
Varda, thank you so much for coming on. Any last words? It looks like you wanted to maybe say one more thing.
No, well, thank you. I mean, this has been amazing. The discussion has been just as insightful and delightful for me as it has been for you. And yeah, I mean, this is something that hopefully we can build on. Understanding of crypto for both parties, actually. I mean, it's not just the crypto community that does not pay as much attention as they should to the fundamentals of macro or fundamentals of markets. It's also the markets community that sort of holds back from understanding the crypto side of things. Yeah. And if we could be a bridge for that, it should be pretty cool.
That's what I love. That's what we always call ourselves, the bridge between Bitcoiners, or the suits and the sweatshirts, if you will.
Yeah, absolutely. Yeah, that's well put.
We'll definitely have to bring you back. Are you on Twitter or X, or where do people find you?
So yes, so X, not as much. LinkedIn, yes, in a significant way. X is something that's underway. So over the next couple of months, X should be significant too in terms of presence.
I love it. Well, Varda, thank you so much for coming on. Definitely follow her on LinkedIn. And we'll have to bring you back. Let's stay in communication and try to get you on every once a month or something. So
absolutely. I look forward. Thank you.
Awesome. All right. Thanks, everyone. We'll be back here tomorrow at 12:30. We got Caleb and, of course, Problem Sniper, another options trader that we love to bring on. So have a good Monday, everyone. Hopefully the market turn around here today, and good earnings week. But we'll be back here tomorrow at 12:30 Eastern. Thanks.